Good morning, greeting to us all. Welcome to the newest of Banking in Digital Age webinar. I am Vika Kwen and I'll be your host for the next few hours. How is everyone doing? I hope everyone is in good health today. Welcome and good morning to our distinguished speakers, Mr. Ben Giles, Queensland Trade and Investment Commissioner, Indonesia Trade and Investment Queensland, Mr. Bambang Setiawan, Chief Digital Banking Digital Enterprise Indonesia. Morning, Mr. Bambang.
Good morning.
Mr. Adiguna Mahendra, lecturer at Central Queensland University, Indonesia. Mr. Mario Bajulov, Chief Executive Officer, MBS Group, Australia.
Good morning.
Mr. Bari Aryono, Executive Chairman, Digital Banking Institute. Morning, Mr. Mario. And
Selamat pagi.
Selamat pagi, Mr. Bari. All right, ladies and gentlemen, the penetration of banking digitalization in the general public has started running and was even indirectly boosted by the COVID-19 pandemic. This can be seen from digital banking transaction data, which soared significantly during the pandemic. However, to be able to develop banking digitalization, there are a number of challenges that must also be faced. This must be answered carefully so that the potential of existing banking digitalization can be utilized more optimally. MBS Academy, Central Queensland University, Queensland, and Digital Enterprise Indonesia, with the support of Trade and Investment Queensland, have been working together to highlight digital risks in banking and provide advice on mitigating them. So, without further ado, let us listen to the welcome speech from Mr. Ben Giles, Queensland Trade Investment Commissioner, Indonesia Trade Investment Queensland. The time is yours, Mr. Ben Giles.
Terima kasih banyak Ibu Vika, selamat pagi Bapak dan Ibu semua. Nama saya Ben Giles. I think I'm going to speak English and it will be a little bit quicker today. Maybe I'll do Indonesian later. But as Vika said, my name is Ben Giles. I'm the Commissioner for Trade and Investment Queensland. I'm joined by my colleague Ibu Irma Irsad, TIQ. We are a trade and investment body, representative office here in Jakarta for the state, Provinsi of Queensland, Australia. Our role is to connect businesses and institutions between Queensland and Indonesia. Now today, I should say welcome to today's webinar. We are thrilled to have two of these clients that we engage with from Queensland, namely MBS Academy and Central Queensland University. I should also add that it's been fantastic working with Digital Enterprise Indonesia, DEI. It's been a pleasure supporting the whole team, and we thank everyone for participating. So today's webinar will involve a lot of information and a lot of speakers, and I encourage all of you, if you have any questions, enter them in the Q&A section below. We're hoping that can flow very quickly and to be as interactive as possible. That is probably all for me. Sit back and enjoy. Terima kasih banyak, Bapak dan Ibu.
Yay, terima kasih banyak Mr. Ben Giles. Nanti kalau misalkan ada yang mau bertanya bisa langsung di Q&A session. If you want to ask a question, so you can chat in Q&A session, all the participants. Thank you, Mr. Ben Giles, for your welcome speech. Next, we will move on to the presentation session. So for those of you who have questions, please type it directly in chat section. Don't forget to write your name and who the question is for. At the end of the session, lucky participant will get the special prize. Woohoo! In the morning, get the special prize. So please type your question in the chat section, yeah? Don't forget. Okay, for the first, we will listen to the presentation from Mr. Bambang Setiawan, Chief Digital Banking, Digital Enterprise Indonesia. But before Mr. Bambang speak, we will see video from Digital Enterprise Indonesia. Okay, Mr. Bambang, the time is yours.
Okay, thank you, Vika. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Good morning, everybody, ladies and gentlemen. Thank you very much for attending this international webinar. It is a collaboration among 4 institutions from Indonesia and Australia. Digital Enterprise Indonesia, MBS Academy Australia, Queensland Central Queensland University Australia, and the big support from Trade and Investment Queensland. So thank you for this opportunity to speak on this precious webinar. I would like to share and discuss about the challenges and risk mitigations of digital banking in Indonesia. Those main 2 issues is very popular now in Indonesia as Indonesia economy embracing the digital banking and digital banks. Why I talk in 2 kinds of digital banking and digital banks. Actually, they are different. Digital banking maybe come from conventional banking, providing service, digital banking services, but digital bank is a pure digital bank, which is a new bank, and we will discuss on that. Those facing the risks that is enormous at the current state. So we will discuss it on 20 minutes. So I will make it quick by share this presentation. Does everybody see my presentation? Okay, is it appear, Vika?
Yes.
Is it good?
Mr.
Okay.
Bambang, is it good?
Okay. Okay, this my credential. You can check in the paper anyway. Those the 3 agendas that we will discuss today. Now is the challenges of digital banks in Indonesia. I may group the challenges on the 6 group of challenges from the perspective of customers, from the perspective of infrastructure, from the perspective of security and risk, from the perspective of industry, from the perspective of culture, mindset, and digital talents perspective, and also the most important one is regulatory perspective. Since if you don't have comply with regulation requirement, then we cannot having digital services or digital banks. First of all, is customer perspective. On this development of digital banking and digital banks, there is a perception gap between customer experience on customer experience between banks and customers. Customers using digital bank services or digital bank, they really expect they will get the customer experience. And also banks sometimes feel that they have already provided the customer experience, but actually not. So this gap is not still large right now. So the banks, digital banks or digital banking services must address these perception gaps correctly in order to maintain the trust of the customers. Why? Because on this current state in Indonesia, customer is divided, group on the some segments. There is a segment of customers who still trust more on the existence of brick and mortar of the bank, which is the physical evidence. They still need to come to the branch, see the big house, big building, nice, neat, and meet with the beautiful tellers and beautiful customer service officers, and they talk together. Some of customers really need that, still really need that, especially those categorized as affluent customers, and they merely use mostly using bank services on the corporate segment. So a digital bank should address this. So how to get their attention for this affluent customer segment. However, since pandemic of COVID-19, which is enormously forced customers to adopt digital banking because they have to maintain social distancing, not to meet with the people. Then COVID-19 accelerate the digital banking. What I said that some segment customers, they have already going through an evolution of banking channels in Indonesia as presented in this chart. From Bank 1.0, Bank 2.0, Bank 3.0, and now it's going to Bank 4.0. And fortunately, Alhamdulillah, I'm the one who has been going through this evolution. I was in Bank 1.0, Bank 2.0, Bank 3.0, and now it's going to Bank 4.0. So yes, I'm old, yeah, but my spirit is still young. My spirit is Bank 4.0. So that's why I was asked by Digital Enterprise Indonesia to speak up here. Second perspective of the challenges of the digital banks in Indonesia is infrastructure perspective. Upgrading banking system is not easy. Many banks cannot timely adopt the digital banking because they don't know which one is the best fit to their needs. And yeah, I'm sorry, I have to talk this even though this is international webinar and Australian also here. In Indonesia, we still have a connectivity gaps. The biggest challenge that digital banking faces is the uneven proportionate of digital connectivity in the regions. Some regions, we call it a blind spots. Some is very good, especially in Jakarta, in Kebayoran Baru, in my region, in Bandung, in Surabaya. But for like in Lombok, like in Merauke, in Toba, maybe connectivity is not as good as we expect. This is the challenge of digital banks and digital banking services in Indonesia. The third challenges come from security and risk perspective. Security and safety is the main concern of customers. Our customers really need that our bank is safe from hackers and any other scam. When they put money to the banks, they trust on us to safeguard their money. So, and that's why they sometimes they are not they do not trust on something that we cannot touch, we cannot see. This is digital banking. They still trust on the appearance of people, branch manager or customer service officer. But actually, don't be sad about this because it's an evolution. I believe on the future, people gradually will trust more on digital banking. Yeah, because of the evolution, always because of the new normal post-pandemic of COVID-19. Rising threats and cybersecurity requires more effective and tactical way to combat such threatening by adopting more secure and seamless technology. Adoption of secure and seamless technology infrastructure also is not easy, is very expensive, and needs capabilities on doing so. Now, in industry perspective, it's about level of playing fields among banks, fintech, and big tech. Maybe big tech in Indonesia not so influencing the landscape, but on the world, like WeChat, like Google, Facebook, they already function as a bank, but Indonesia still not yet. However, the head-on presence of fintech in Indonesia create problems on level of playing fields. Banks faces so many regulations because it must be trusted, must be prudent. On the other hand, fintech, even when fintech
leadernya si Arifin bro, yang pegang.
When the fintech going around in Indonesia, the regulations not yet there. So this has create a problem on level of playing fields. But in Indonesia now, it's like big tech, like platforms such as Gojek and Grab, even have a larger base of customers. To be combined, Gojek just within three years, they can grab millions of customers. A bank like Mandiri, BRI, BNI, BCA, they have been going through years to achieve millions of customers. But Gojek just say 2 or 3 years, they have already grabbed millions of customers, and every day is rising enormously. The next perspective is from culture and mindset perspective. Banking system and employees shall undergo a cultural shift to build digital culture. We cannot just transform digital without transforming the culture first. Otherwise, we just digitize the manual process and forget about the digital. Then when we do digital, we still asking our customers to come to sign up on the web pen, to copy the document, to give the documents in paper. This will happen if the culture doesn't shift. Successful digital transformation requires strong digital culture and talents. And unfortunately, currently, on the current state, digital talents still rare, still not as much as we need. So this is the challenge for digital banks to provide, to create, and to hire more digital talent. And now the most important one will be the bank or the financial business is a regulatory perspective. But I got good news from regulatory perspective, since OJK is the Indonesian Financial Service Authority, has a 3 options to choose for the bank. Would you like us to create a pure new digital banks, very new, extremely new, or we transform for conventional banks to digital banks, or the third option, providing digital banking services, so like a hybrid bank. This very good options offered by a Financial Service Authority or OJK. OJK also requires that when we going to digital banking services or digital banks, we have to get deep understanding on risk mitigation on providing digital services. Also, we have to provide customer data protection. And the most important one, again, I have to talk about this because I was a vice chairman of PPATK, Indonesian Financial Intelligence Unit, is to implement anti-money laundering, know your customer, and anti-counterfeit of terrorism financing. It must be implemented effectively. And the capability of management on information technology. At least one director must have IT capability. On the regulatory perspective, OJK also, when we check the roadmap of OJK 2020 to 2025, the authority really would like to accelerate the digital information through strengthening IT governance, encouraging usage of IT game changers, such as open API, cloud computing, blockchain, AI, super app, and omnichannel, and also the authorities encouraging IT cooperation and the implementation of digital funds digital bank. Now we move to second issues, which is our discussion this morning, is on risk mitigation. Risk mitigation is a part of risk management. Risk management is the foundation of the operational banking excellence. As you can see on this chart, I draw this chart to show that all efforts in banks are leading to operational excellence. We have digital banking. We have we do transformation. We do digital transformation. We implement performance management. We develop customer experience. All this, the goal is to achieve banking operational excellence. To achieve this excellence, we have to implement, we have to have a foundation, which is governance, risk management, and compliance. So this risk management on this context, not just risk management, but integrated risk management. Integrated risk management means that it's a strategic and systematic process to identify, analyze, and mitigate risk. Integrated risk management is a new approach to risk management that integrates risk activities from across organizations to enable better and more sustainable strategic decision making. So by adopting integrated risk management, there must not be a silo between organizations, between departments, between divisions, between board and commissioner, board and group heads, and so on. It must be going hand in hand to safeguard the company through implementing integrated risk management. Integrated risk management recognizes that each organization faces unique sets of risks and threats, and as a result, must take risk-centric approach to safeguard the company. Otherwise, the bank will not save because of a lot of attacks currently. This is the 8 risks that banks, whether digital banks or conventional banks or conventional bank providing digital service, they face those 8 kind of risks, from strategic risk, compliance risk, legal risk, reputational risk, operational risk, market risk, liquidity risk, and credit risk. And on the concept of integrated risk, every risk, each risk cannot be independently treated. Its risk may impact to other risks. If we have, like, for example, if we have a lot of non-performing loans, which is a credit risk, it's not just impact to the financial matters, but it will impact those liquidity risk, market risk, compliance risk, but finally on the strategic risk as well. Operational risk, which is mostly referred to the ability of human capitals to provide services excellently. Mostly on the old fashion, risk operational treated as just risk that must be analyzed, identified, measured, and mitigated by operation people. But on integrated risk management, operational risk must be being a consideration of all organizations, because risk operationals may lead to the strategic risk. And on this operational risk, in the past, consists of digital risk that we have. But actually, digital risk not always impact to operational of the bank, but also strategic risk, and also the bank as a whole will be impacted. This is the attributes of integrated risk. When we adopt integrated risk management, we have to get a strategy. We have to able to do assessments, to respond, to communicate and reporting, to monitor, and the capabilities of technology. Since the millions of transactions cannot be manually monitored and analyzed, but manually or by low computing technology. Bank needs that, because especially on digital banks who rely on millions of transactions digitally. Okay, then so on the operational risk, there is a digital risk, but actually digital risk is something that must be treated more than operational risk, because the impact is on strategic risk. Digital risk management is identifying, assessing, and treating risks resulting from digital transformation and the continued adoption of disruptive technology. Once we adopt disruptive technology, we have to identify, we have to measure, and to mitigate digital risk. Digital risk consists of 7 risks. I grouped on 7, maybe other speaker or other analysts group in more than 7, but actually at least 7 group of risks. It says cybersecurity risk, third-party risk, cloud computing risk, data privacy risk, resiliency or automation risk, digital talent and workforce risk, and digital compliance and reputational risk. Like I discussed before, so those 7 risks leads to a strategic risk. When we do digital banking, this risk is getting exponentially rise, because there is no way to not to manage the digital risk, since if we are unable to provide risk mitigation on digital risk, then it impacts exponentially. It impacts hugely on strategic risk. Strategic risk means bank may be collapsed or must be closed or liquidated, also because of the loss of trust from customers. That's why on this context, I appreciate the authority to regulate that digital banks must have understanding on risk mitigation of digital risk, which is implement digital risk management. Okay, well, I'll discuss not too much on this issue. Okay, this is cyber security risk is the biggest risk that we have on digital risk. It's the risk of cyber attacks. The probability of exposure or loss resulting from a cyber attack or data breach. As the increasing number of devices connected to our system in order to provide data exchange, as the bank digitally being global and the web of employees, customer and third party vendor increases, this causes exponentially increasing the attack of malware, vulnerabilities, and other exploits.
Mr. Bambang,
yeah.
Your time 2 minutes left. 2 minutes.
Oh, okay. There's a lot of things that I have. Okay. Cyber attacks is the number 5 top risk of doing business, as according to World Economic Forum, and according to National Cybersecurity Agency, more than 232.5 million cyber attacks in Indonesia just in 2020. So I have a video. Can I show it, or okay? Just move on, yeah. Just move on.
The digital world has transformed modern business, but wherever there's opportunity, there are also risks. Here are 10 cybersecurity threats you should be aware of. As the Internet of Things grows, so will distributed denial of service attacks. Millions of new devices are coming online. Everything from fridges to cars. But if not secured, they could all be hijacked to bring down websites. Are you on top of this? Data remains king, and theft of data is still on the rise. The well-publicized and financially disastrous leaks of recent times will become much more common unless companies with large amounts of personal data improve their security policies. Have you got this covered? Web apps are under attack more and more. It doesn't take a genius to launch an SQL injection, for example, so more people are having a go. And the more who try, the greater the risk to you and your data. Can you keep them all at bay? Things are going to get personal with the increasing use of ransomware. Being locked out of your system or blackmailed over personal details until you pay a release fee is getting more and more common. Are all your weaknesses covered? Passwords being forgotten, shared and stolen is forcing many companies to introduce biometric sensors to protect their data and employees. Are you looking at this? Adobe Flash is in the spotlight for websites, as there are just so many vulnerabilities in browser plugins, and it's a common way of delivering malware. So what's your usage policy? The insider threat is unavoidable. Whether careless or malicious, your employees are the ones that can most easily compromise your valuable data. But there are ways to protect it. Because who can you really trust? Check the mail carefully. Phishing is getting harder to spot. Professional criminals are doing really sophisticated things online, and even complementing it with highly convincing activity offline. Are you helping your people stay safe? HTTPS will become the norm, as more and more websites are using it by default to serve their web content more securely and increase customer confidence. But are you up to date with the challenges this creates? Companies need expert help. Just as the threat is growing, the supply of cybersecurity specialists that can help your organization is dwindling.
Okay. If you could give me 2 minutes to close the presentation. I just explain one digitalized cybersecurity is the biggest one. The absence of comprehensive cybersecurity will create a financial, legal, and reputational risk. And just the only one. There are still 6 other risks, which is third-party risk, and also cloud computing risk, data privacy risk, resiliency risk, digital talent, and digital compliance and reputation risk. Those risks must be mitigated effectively by the bank if we would like to provide digital bank services or digital banks excellently. One mitigation that we can do is adopt a solution with called it cyber threat intelligence. Cyber threat intelligence is an essential capability on the security program that can analyze, can detect, and provide information on decision making, so that management may take a decisive decision. I'll skip this, but this one is the core of the presentation. The risk mitigation. The risk mitigation is we have to provide controlling procedures to effective and integrated security solution on protecting people, our customer data, and devices remotely. We have to implement third-party risk management on analyzing the associated with the third-party of service, and implement managing compliance and fraudulent domains and mobile apps, and managing dynamic workforce risk to avoid, to mitigate, not avoid, just to control and to mitigate the risk of workforce, digital talent, and to identify by identifying assurance and access assurance and activity assurance, and establishing robust data compliance and data protection practices across the entire organization, and well-supervised digital content to ensure it complies with public communication and retention rules from the regulators and the PRED standard. We also should develop a resilient data and analytic strategy for an artificial intelligence ready and data-centric organization. Those mitigations cannot be shown on this chart, and we can discuss this later. Thank you very much, Ivika, and ladies and gentlemen. I hope this fruitful for you, and let's see on the question and answer session. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Mr. Bambang, for your presentation about the challenges of digital banking in Indonesia. So for those of you who have questions, please type it directly in chat section with the using format name _company _questions. And for the question is 4. And at the end of session, we will be the lucky participant will get the special prize. Okay, for the next, we will listen to the presentation from Mr. Adiguna Mahendra, lecturer at Central Queensland University, Indonesia. But before Mr. Adiguna speak, we will see video from Central Queensland University, Indonesia.
My name is Alistair Dawson, and I am the Vice President Global Development for Secrecy University, Australia. We're a university with great promise and with a vision for the future and a can-do attitude. That means if you want to dream to be something, then we can help you on that road to make sure you achieve your goals and your vision for your life. Secrecy University degree, an Australian degree, it's a really important degree that Indonesians can benefit from. And that's because as an institution, we believe that whatever we teach has to be able to be vocationally driven. That means that when people graduate, they have to be able to use their degree. It creates jobs, it creates opportunity in the future. And so our degree is really based on that. And so in Indonesia, where there is so much development, so much opportunity for growth, a qualification like ours that allows people to grow into the future and get jobs, and get employment, career support is an ideal degree for this country, and I think that's what works well. Secrecy University's vision in Indonesia is one of promise for certainly for the next 20 to 30 years. Because it's a land of great opportunity, we expect that we will have a number of campuses. We expect to have a lot of people who will have earned both undergraduate and postgraduate degrees. Whatever you dream to be, you can be if you apply yourself. And so by working at CQ University and studying at CQ University, all of our degrees are meant to help enable you to be just what you want to be. Artificial intelligence and through other technology means the learning process to help people. So it means that the ability to teach digitally, and in that way that we can make a contribution to this country as it develops as much as anything else. And it has a very similar aspect to culture as we have in Australia, that it has what we call a can-do attitude. That means that people really want to make things happen. So it's a country that we believe has so much opportunity, and that's why we want to be a part of it. It's a country of amazing diversity, but it's the diversity of this country that's what makes it such a brilliant place to come and visit and spend time.
Okay, Mr. Adiguna, the time is yours. Okay. We wait the Mr. Adiguna.
Ladies and gentlemen, can
Okay.
hello, ladies and gentlemen, can you hear my voice loud and clear?
Yes.
Yes, Mr.
Okay.
Adiguna.
Well, I just got disconnected. Okay, so you can see my screen as well here, hopefully, right? So okay, so I hope my screen is clear. So I'm going to talk about the customer identity verification using AI technology for banks and fintech. So in the next 30 minutes, I will share with you what is technology used for customer identity, especially using AI technology. So a little bit about myself. My name is Adiguna Mahendra. I'm a lecturer as well as chief of AI of AI company in Indonesia, which developed a solution for banking and smart cities as well, called Nuplux. So this is my my credential. I've been developing artificial intelligence globally for many different kinds of production systems. So let me try to explain a little bit about the identity verification. Okay, so what is actually identity verification? This is something that we are doing every day. Actually, this is a process that ensures a person's identity match the one that is supposed to be. So if we want to know that someone is really someone he told us about, we need to prove, we need to see their documents, or we need to see their proof that they are who they are, right? So this is called the identity verification. And history
Pak Adi, Pak
Yeah.
Adiguna, sorry for interrupting. We can't see your slide yet. I think I can't see your slide yet.
Okay, sorry. I think I'm going to
Thank
re. Okay, I hope that you can see my slide here.
Already.
Yep.
Okay, great.
Thank you.
Okay, so historically, what we know about EQIs or or know your customers actually begin since 2000 BCs, because there are tax evasion in the dawn of the history in China, for example. So they need to have a mechanism to actually verify the documents and everything. Also in 1800 in Europe, there are so many legal cartels, and so many illegal activities are funded by the legal cartels in Europe. So this happens until 1940s, that U.S. gangsters dominating in major cities in U.S. like in Chicago. We know the name like Al Capone and mafia like him in U.S. In the 50s, the U.S. start to make a regulation, and then this is called the Federal Deposit Insurance, to reassure the American public of the safety of the banks. And in 60s, there's a very famous individual called Frank Ebeneal. So he used various fake identities, and this is actually filmed in 2002. There's a movie called Catch Me If You Can, and this is very this is actually the beginning of people are realizing that we need a way to actually verify the identity. So in 70s, the US finally they deploy a Bank Secrecy Act, which is the US legislation to prevent money laundering and the use of criminal activity to fund terrorism. So EU also follows, and in 2001, there's a US Patriot Tax. This is followed the tragedy of 9/11. So there is a more tight control, especially on the terrorist funds. And finally, in 2018 to 2020, there's a new anti-money laundering directive called AML5. And this is actually the standard for the prevention of money laundering and terrorist financing. So EQIC is very important. So this is a practice which is carried out by companies to verify the identity, and this is also needed by regulation. So many financial institutions now needs to be compliant with this regulation. In Indonesia, we also have some regulation related with this. We have anti pencucian uang (APU) and pencegahan pendanaan terrorism or PPT. And this is also referring to the global anti-money laundering directive, version 5, which is the latest one from US, as well as AIDAS, or electronic identification, authentication, and trust services from the European Union. There are also some regulation following this, and this is mostly created by OJK. Yeah, so there's a Peraturan Bank Indonesia as well about the EQIC principle. There's Undang-Undang RI nomor 8 tahun 2010 on the anti-money laundering, and then there's the regulation about EQIC from the OJK, and this is for bank and non-bank sectors, as well as the foreign exchange non-bank. So there are a lot of regulation about the EQIC and their application. Also, some of the things related with the digital banking, which has been explained by Pak Bambang before, is also actually regulated. For example, there's a Peraturan OJK nomor 19 2014, which is this is about the branchless inclusive financial services. So this is also talking about the digital banks and how to secure them. So there are a lot of regulation about the KYC and customer due diligence in Indonesia, but there are challenges, right? So we have a challenge in Indonesia on how to implement this KYC. First of all, we have a huge country, so coverage is a kind of problem in Indonesia. We have a very huge area with 17,000 islands. We have 270 million people in village and the cities, okay? And this is resulted in a tremendous cost if we really want to develop this KYC, especially manually when you have face-to-face KYC. So we need to disburse a cost in printing forms, sending documents, and also the human verificators, which have to look one by one into the documents and everything, right? Also, the time needed is really big. We need a lot of time actually to create, sends, verify documents, and also don't forget about the sending the documents and everything. And the last is also the security risk. There's securities of someone is going to forge the identity or forge the documents, or even someone can create a fictitious bank account for illegal fund transfer, for example. So this is a main challenge of KYC. So now there's a solution for that, and we call it eKYC. Okay, so eKYC is a platform which help us identify and verify customer or potential customer using a fair use data source. So you can use internal data source, okay, internal data from our institution, whether it is a bank or a fintech. And we can also connect this with a national identity data source or Dukcapil. Okay, so how it works is actually we have application. So for example, the bank have the banking application, and this banking application will later can be matched using biometrics, whether this is a face or fingerprints, and also matching the documents. And we can do the database sync with the Dukcapil, for example. Then we have a verified customer data. We will see the detailed topology later. And this eKYC actually has so many applications. For example, for the banking and fintech, this is for opening the new account, to access the account, and for complaint handling as well. For the insurance, this can be used to buy insurance, to claim handling, for the government to renew electronic certificates, renew ID documents. Even for example, this can be also used by on-demand app like Gojek, for example. So if you really want to become customer or provider of Gojek, especially the provider, you don't need to come to the office of Gojek, for example. You can just use the eKYC to verify your identification, and you are good to go. You can become the driver of Gojek, for example. For the education, also this is very useful. For example, for the examination, so we are sure that the examinee is someone who's really valid. Okay, it's not what we call a jockey, right? Someone who replaced the real examinee. For the healthcare, also this is going to be useful for telemedicine or health consultation. And this is also actually now is being tried also in Korlantas. So to extend your SIM, your driving license, you can just use a KYC. You can use an application, and then this will be matched with your identity. So let's discuss about the Dukcapil platform bersama. This is actually a platform by Directorate of Population and Civil Registration of the Ministry of Home Affairs or Kemendagri, to enable a third party to access civil data to verification. And they have 268 million citizens there. This is the last census in 2020. So any institution can verify the data of prospective customers before granting account access. So any third party now can have a cooperation agreement or PKS with the Dukcapil. Okay? So Dukcapil can provide access to institution to utilize population identification number or NIK, population data, and electronic KTP. So we can match identification data with the millions of data that is stored in the Dukcapil. And we have so many use cases for that. For example, we can build the application to open a new account, to registration, or to upgrade account, to do transaction, to do insurance claim or guarantee. Even some of the use case that we are also have implemented is for SIM card replacement in some of the telco company. So if you really want to change your SIM card, you don't need to come to the gerai, to the branch. You just use your phone. So this is some of the use case which is useful for the eKYC. But we do have a precondition. If you really want to implement this eKYC, you really need to select the best provider for this. First of all, we need to have a very fast face detection and recognition. So detection and identification of the face, including the database sync, should be under 0.5 to 2 second maximums. Okay, otherwise it's going to be too slow. And also we need to have accuracy which is above 99%. So this is there's a standard for that. It's called Face in the Wild. This is by NIST, National Institute of Science and Technology in US. So every EQIC needs to be tested by NIST, and your EQIC provider should also passing this standard, right? Another important thing is your EQIC needs to be tolerant to face posture and angle. So make sure the face is recognized even with a special condition like tilted, face down, alt, young, using face mask and everything. And this is very important also that we need to have a liveness detection so we can differentiate between spoof and real face. Now we will see what is liveness detection later. So it is also a compulsory that we need the easy integration, okay, with no customer service contact. So we just can integrate easily using API, and then we have a continuous software updates with the latest enhanced version. And you don't need to actually invest because this is based on pay as you go, okay, and or subscription. And if you really want to implement the EQIC, then you need to have a company which provides you with assistance 24 hours, 7 days a week, with a local team which is capable to handling specific problems. So let me introduce you a little bit about the artificial intelligence biometric concept, especially for face recognition. So face recognition is actually the methods to automatically detect facial features and recognize it to be classified into a known and unknown person. So this research has been performed since 60s actually, but now they really become very strong with the technology called deep learning. So actually for the face recognition, we have two different use cases, which is verification and identification. Verification is to verify whether two face image is the same person or not, and identification is to find the most similar identity from the database. So let's have a example. Let's say we have this lady, right? And then we want to know who she is. So what we do is, first of all, we built an algorithm called deep learning. So deep learning is kind of mathematical models in the form of computer code, which able to detect the face. So if there's a several face, or if there's another object in the image, we detect where's the face. And then after we detect the location of the face, then we use also another deep learning model to extract facial features of our embedding. So if you want to imagine facial features of embedding, this is like a matrix or vectors, right? Like a number. So from the face, we can have a set of numbers, and these numbers, they will actually encompasses all the whole face characteristic. So from these numbers, you will get all the characteristics of the face, regardless of the color, regardless of the facial characteristics, like you have a beard or you have a different kinds of eyes and everything. And it should be small, otherwise it's going to be very the cost of computation is going to be very big, so you will not have a good latency. So the vector needs to be as small as possible. And after that, you have this vector. What you do is you can calculate the distance between the vectors to see what is the face which is actually match with the face that you are inquire, right? So this is the example. So we have a set of vectors, and we compare these vectors with another vectors which is coming from another faces, and you find which one is the closest one, and you set some threshold on that, right? So we can have this kind of numbers. So we calculate the distance, and we see that from this name, Mbak Raisa is the one which has the closest distance. So this is maybe the face of Mbak Raisa, for example, right? Okay, so you see this is numbers. So there are so many constraints that needs to be fulfilled by face recognition. So face recognition itself is a ongoing process, and it is pretty complex because we can see so many variations on the face. We can have a different of hairstyle, facial hair, pose, age, eyeglasses, scarf, makeup, hijab, and everything, right? Especially in Indonesia, so the characteristic of Indonesian is different from the characteristic of American, for example. As in Indonesia, maybe there are a lot of female who wears a hijab, for example. right? So, and there are also many kinds of variations, like the difference in the light. There's a dark and backlight. Sometimes there's a blurry photo. Sometimes where they are wearing face masks, sometimes not, right? So this is, we have to make sure that our algorithm is also taking care of these variations. And also, we have several different kinds of standards for threshold. So we need to also define a threshold for a particular algorithm, whether we want to just filter the high level threshold, for example, the 80, for example, the 90%, like this, for example, and 90% means that all the face which is really look like, then we take it. Otherwise, not, right? So if we want to have a really critical process, then we need to have a very high threshold. So anyone who's really look like that person is going to be a filter. So this is something that we can also set. So the conceptual topology of face recognition is like this. So we have input of the data. This is can come from the application. For example, we can upload the face photo as well as the Anika. And then, for example, if we really want to connect this with the Dukcapil, we upload the photo, and then the AI platform will be matched with the Dukcapil data. Okay, and then the data is going to be returned to the user. Okay, to be more detailed, this is the topology. So, for example, if you are a lembaga pengguna can be a banks or fintech, for example. So if you want to use a platform bersama or shared platform of Dukcapil, so you need to connect with the EQIC provider who actually also have this shared platform, and you can send the API call and everything through this chat platform, and then this API will be synced with the gateway in the Dukcapil, where the EQIC platform will have a face recognition engine on the data center of Dukcapil, and then we'll doing matching of the face and another ID with the database Dukcapil. Okay, so after you have that, you can return the result, and you get the result. Another important thing aside from the face verification is also liveness detection and OCR, right? Why we need a liveness detection? You remember that we have a recent case of a data breach in BPJS, for example. So it is assumed that there are 2,070 million data, including 20 million of self-picture is breached, right? So now the problem is that we have bad guy out there having 20 million of our face data. So they can use that to actually create a fake account and everything, okay? To avoid that, we can use another machine learning algorithm called a liveness detection. So liveness detection is actually the things which can differentiate between a really living figure, living face, and the spoofed face. Okay. Another is also document verification. So you need to match between your Anika, KTP, or passport, or NPWP and everything with your face, for example. So a good QIC must have ability to detect real or fake faces. Okay, so this is, for example, there are 3 kinds of fake faces. You can print it. Okay, you can replay it using some videos, or even you can use a mask. How to differentiate that? You need to have a special algorithm to do that, and we call it a liveness algorithm. So actually, the QIC process can be easily integrated with the ID extraction, for example, OCR. So we have an ID document, we match it with the face extraction, and then we match it with the database so that we know that this person is really who she is, right? For example, if there's a person called Debbie Anggraini, and she also uploaded her KTP, we match the face, and and the ID with the Dukcapil data. So we know that she's really Devi, and she's really living human being, not a fake one, right? So this is actually the concept. So user upload identity document, take a selfie directly, we match it, and we get the result. Right? So this is analytics that we can do. We can do one-on-one match or one-to-end match. One-on-one match is just matching between two different face image, and we can tell the similarity result. But for one-to-end match, we can see from the set of face in the database, and we can rank the similarity result, right? Let's see on some of the use case of this QIC. Okay, first one is digital user onboarding. Okay, so digital user onboarding is like if you are developing kinds of apps. Okay, so your user can use your apps to actually take a selfie and ID picture, for example, KTP, and then the AI matching engine will match the data with the Dukcapil, for example, and then we have the matching result. So this is up to you. You want to admit or not this potential user. Okay. So this is for digital user onboarding, and another is for priority banking customer. So for example, this is for the priority banking customer. For example, if they are entering the branch, the CCTV or webcam will capture and detect the customer face. Okay, and after that, this is going to be matched with the database. And then if they are a priority banking customer, we can give them specific treatment. Like we know their name, we know their priority and everything. Right? Another use case that can be used by banks is actually for ATM. So for the ATM, for example, to detect whether the person is wearing a mask or not, wearing a helmet or not. If they are wearing a mask or helmet, we can ask them to open the helmet or mask, for example, and then we can do the cardless transaction feature. So for example, you can, if this is really your user, really your customer, they don't need to insert the bank card. They just prompted to input the PIN directly because they know that they are really the person, not someone who stole the card, for example. So this is can also one good use case. And this is also can be integrated with there's another AI solution called location analytics. So you know what ATM is actually having the most transaction or having the fake transaction and everything, and you can analyze and see the patterns, right? Another use case that we can do is that we can also combine this EQIC with, for example, some shopping experience. So we can actually, your bank or your fintech can have a cooperation with some shops, some retail shops. So just using a face, they can be authenticated, and also we can pay also using just our face, for example. And this is also going to reduce the usage of a card because you are using just the face of your user, for example. And another important features of this kinds of EQIC or identification verification systems that it is necessary, or sometimes it is obligatory to be integrated with another engine. For example, if you really want to integrate with the e-signature engine for digital signature, you can do it easily. Okay, and also if you really want to integrate with the blacklisted or wanted individual DB, this is from Interpol, for example. Interpol has this data, and you want to make sure that your user is someone who is not wanted by the Interpol, for example. You should be able to do that with this kind of EQIC engine. Also, the next after this, after you have all the identities and everything, you can also connect this with the credit score engine, right? So with the credit score engine, you know their credit risk as well. Also, sometimes it is necessary by the regulations, especially for the politically exposed person. Okay, for example, the state and government major heads or the national regular members of parliament or state-owned enterprise director, for example, you can also integrate with this database. Okay, so there's some key takeaways. First of all, KYC is an activity is needed by regulation now. So this is going forward. We are going to see this KYC is obligatory for financial institution. So identity verification using AI QEC will scale up the onboarding process and also reducing the operational costs. And this is really significant. But you need to have a good EQIC systems which is easily integrated with other database or AI engine or even national identification engine like Dukcapil, for example. So it is advised to use EQIC company which already signed official collaboration with the Dukcapil. Another important thing is that a good EQIC system needs to pass a global recognition in security and accuracy standard, okay, such as ISO 27001 and NEST as well. And then the last, this is advisable to engage with EQIC company which has their own internal development capability, because sometimes there's a specific condition that needs to be fulfilled, and this is difficult if we are using a EQIC company which use a ready-made engine from another provider, for example, because this is difficult to customize. So I think this is a key takeaways from the identification verification using AI. Thank you very much.
Okay, thank you, Mr. Adiguna, for your presentation. For those of you who have questions for Mr. Adiguna, please type directly in chat section. Don't forget to write your name, your company, and the question is for. At the end of the session, lucky questioner will get a special prize. Thank you, Mr. Adiguna. So next, we will listen to the presentation from Mr. Mario Bojilov, Chief Executive Officer of MBS Group Australia. But before he speaks, we will see the video from MBS Group Australia.
Thanks, Vika.
Yes, Mr. Mario.
Can you see my screen?
Yes, Mr. Mario.
Thank you. First, I would like to thank Trade and Investment Queensland for helping organize this seminar, and also Digital Banking Institute and Central Queensland University. My name is Mario, and just briefly about me, I have been involved with risk and technology since 1994. I'm a certified information systems auditor, and my background is in applying data analytics in relation to risk. I'm also currently finishing my PhD research at Central Queensland University, and my topic is on identity fraud. And this is some of the things that I'll be talking today. So today in my presentation, I would like to just take two different perspectives, because risks in an organization are both internal and external. We have to deal with people who are trying to penetrate the organizational defenses from the outside, but we also have problems that we need to take into account on the inside. And what we'll be talking today, there's some introduction and what is happening currently with risk, and why digital risks are more and more important than ever. We'll have a look at some internal risks, some external risks, some ways how you can actually address that, and also we'll finish with some takeaways at the end of the session. So when we look at the moment what's happening here, there is a number of different risks that organizations need to deal with on a daily basis. And specifically for Asia Pacific, this is a research done by KPMG. Specifically for Asia Pacific, cyber, social engineering, faster payments, evolving digital channels are things that banks are really concerned, as well as open banking. So when we look at that, think about what's happening. We're dealing more and more with digital technology as a result of COVID-19. Now, cyber and data breaches. Okay, the increased use of digital technology naturally increased our cybersecurity risks, because more and more of our customers are using digital technology, as well as more and more of our employees. The issue is that fraudsters are taking opportunity of that as well, not just the organizations. So social engineering is on the rise. It has always been an issue, but of late it's becoming more and more. Social engineering is a way to extract information by pretending that somebody is not who they are. And it has been happening for the last 30 years, but now it has risen significantly. Evolving digital channels. Think about it. As a result of the lockdowns, it's difficult for anybody, both customers and employees, to get to the office or to the branch. So what is the solution? Internet banking, mobile banking. So suddenly, digital channels have exploded as a result of COVID-19. They have always been there. But the thing is that in the last 12 months, people who have never touched a mobile phone to do banking actually started doing it. And that trend will continue. And open banking. Now, on top of everything else, what banks need to do is deal with is actually open their internal information to external parties. There are countries who are already mandating that. They're telling the banks, you have to design an interface for third parties to tap into your internal systems. That may be transaction systems, that may be systems containing customer data, any type of system. So this is a totally different challenge, because up until now, at least the banks have always managed to protect their information, simply because there weren't that many third parties accessing that information. But now the regulators are saying, well, you must do it. Well, it's a totally new environment for a lot of banks. Now, and have a look what's happening. This is research from McKinsey. The top one is banking. Before COVID-19, we had 55% of the digital users. 55% of the users were digital users. As a result of COVID-19, just within 12 months, that number increased by 23. So that's almost half. So we have 23% of the users who are now using some sort of digital technology. And the highest adoption is in banking, and it will continue. Now, all of these people who have never touched a mobile to do their banking, when they realize how easy it is and that the world is not going to end and nobody is going to break into your accounts right away when you use your mobile, these people will continue using it. Once they start, there is no stopping. So the adoption of digital channels will continue to grow significantly, and the associated risks will continue to grow significantly as well. So banks are certainly in a very difficult situation. It's quite challenging, not just for the banks, for the whole planet, it's quite challenging. Banks are at the forefront of that. And there is a number of external threats that have increased as a result of COVID-19. Simply COVID, these threats have always been there, but COVID accelerated them. Just as it accelerated the adoption of digital technology, it also has accelerated the threats which are associated with the digital technology. So have a look what's happening here. Identity theft complaints, the Federal Trade Commission in the States. So when we have a look here, what can we see? January, 10, February, March, and suddenly when the first lockdown started, see the explosion. April, May, June, July. It's probably they started dropping a little bit simply because the banks and the various financial organizations learned how to deal with these things. But the initial explosion was huge. And we can expect that type of trend to continue. Now, when we think about it, external threats are external threats. But what about the internal threats? Well, these have increased as well. Suddenly, people who have never even who haven't heard the term VPN, suddenly these people are working from home. VPN stands for Virtual Private Network, and this is the way to access corporate systems from external locations. People are doing Zoom, people are using Teams, people are working from home, all of these things. So suddenly the question is, these people who up until yesterday have never done it, how prepared are they to do it now? And that's a process that will take some time. Have a look what's happening. So ransomware and phishing attempts increased 64%. Banks specifically saw 520% increase in ransomware and phishing attempts. But the question is, how prepared are the employees of the banks to deal with these things? How prepared are they to think that this email that comes from a very reputable source, by the looks of it, is actually a phishing one? And I can tell you, simply didn't have the time to show it here. This is something that we discuss on our digital risks training. I can tell you that some of them are really professionally done. Some of them are almost indistinguishable from the real thing. And when you get an email asking you for some details from the National Taxation Authority, a lot of people will just click on it, and that's it. That's enough. But the thing is that employees need to be aware that actually not all of these things which look legit are actually legit. And this brings us to a really interesting situation here when we talk about internal risks. This is research done by ISACA. ISACA is the premier information systems and information governance association in the world. It's got 150,000 members worldwide. I'm very closely associated with ISACA. I'm a board member here in Brisbane, and I used to be the ISACA president in Brisbane 3 or 4 years ago. ISACA does a lot of research, and this is what's happening in 2020. This is the state of cybersec in 2020. So these are the threats, the threat actors that are a danger to various organizations. Number one, cyber criminals. Okay, we always knew that. So cyber criminals are there. They are becoming more and more organized. We'll be dealing with them a lot more. Hackers, various types of hackers. These two usually most together with cyber criminals. And then number three is malicious insiders. So these are people who actually are trying to harm the organization on purpose. Malicious insiders is also something that we knew about for quite some time. This is why internal department exists, dealing with occupational fraud and so on, not just customer fraud. And number four is non-malicious insiders. Non-malicious insiders are employees who actually become a danger simply because they haven't been told how to deal with things in this new environment. They haven't been told that actually phishing exists. They haven't been told that the word password is not a good password. And by the way, the word password is one of the top 10 most popular passwords in the world. And we cannot blame them. But the problem is that they are a danger. And when you look at number 5, nation state attackers, so non-malicious insiders are actually more dangerous than the nation states. It's just mind-blowing. So all of these cyber spies sitting in various countries in the world are less dangerous than your own employees in the bank. It's very easy to be fixed. However, the situation does exist at the moment. And think about it, what's happening here. Excuse me, a vulnerability map. In the middle are the bank's systems. Usually, these are quite well protected. Regardless of what we're saying about cybersecurity and issues with cybersecurity, cybersecurity is getting funded better and better. Nothing's perfect. There are still problems that exist there. But we're getting better. Organizations are getting better. I have been involved with that type of research and situations for the last 15 years as a result of being an active ISACA member and board member and so on. I know that whatever was happening in 2010 is very different from what's happening in 2021. At ISACA, we always talked about there is not enough money for cybersecurity, there is not enough money for digital risks. There is money now. Money is never enough, but at least there's a lot more, to be honest. But the problem is that your systems, which are well protected, are one thing. However, the points of entry into your internal environment, when you send your employees to work from home and you give them a laptop or a tablet with which they can access the internal systems, that's a totally different proposition. And how many of you are 100% certain that the employees are not sharing their laptops or tablets or other devices with their parents, the picture on the left, or with their kids, the picture on the right? And parents and kids do not behave like the employees simply because they like clicking and browsing the internet, for example. I know that my parents actually browse a lot more stuff than me. I usually use internet for work. My parents use it for fun and for a lot of other things. So now we actually need to tell the employees that, listen, just be careful, because this device is actually, you have to treat it in the same way as the device on your desk at the bank. Would you let your kid play on your desktop or laptop, which is in the office? Very likely not. Same at home. How many people do know that, however? Well, that's a totally different question. So, what can we do? Things are actually, they can seem scary, but at least the non-malicious insiders problem can be addressed relatively easy. What you see here on the left, this is a guy, this is an Austrian doctor called Ignaz Zimmermann. He used to live in the late 19th century. He is actually the guy who implemented an extremely simple measure which resulted in a humongous effect. He's the one who suggested that the doctors should be washing their hands before they actually go and help a lady give birth. Washing hands, something which we all take for granted, suddenly it was a revolution in the late 19th century. Simple, extremely simple measure which resulted in this. On the left, you can see the mortality rate in newborns So the highest one is 32% or something like that. So 32% of the babies were dying simply because the doctors weren't washing their hands. And after, on the right, after the red line, the vertical red line, doctors started washing their hands and suddenly the mortality rate dropped to below 5%. Extremely simple measures can bring humongous effects. And this is actually the situation with our internal risks. We can address the non-malicious insider problem quite easily by implementing simple things. One of them being training. 70% reduction of security-related risks when businesses invest in training. This is research from various companies. 93% of cybersec professionals agree that training, that humans and technology need to work together, and training is one of them. Because from my work experience, there is no system that can fix the problems that humans create. That system does not exist in the world. No matter what system you put in place, when somebody writes down their password on a post-it note and puts it on their monitor, well, it doesn't happen as often anymore, but they still keep the post-it note on their desk. So it's not as visible, but still relatively easily accessible. There is no system that can fix that. And we actually want to do something about these things. Training people is the way to go about it. Now, training can actually result in 7-fold return. And have a look what's happening here. Most cybersecurity training programs result in 37-fold return on investment. So if you have if you spend $100 on training, you actually are going to get back as a return 3,700. This is what the research is showing at the moment in terms of training. So these are the internal risks. And malicious insiders, this is a different proposition. However, the non-malicious insiders is the one that we need to deal with at the moment more proactively. Now, but what about on the outside? Fraud, various types of fraud are on the increase. Dr. Higuno was talking about customer identification before, definitely. And these things will keep growing in terms of a threat. But have a look what the research shows by LexisNexis, one of the risk management the top risk management consultancies in the world. What is the cost of fraud? So $1 lost in online or mobile fraud would require $3 in recovery efforts. So if you have $1 million of fraud happening over a period of time, the organization will spend $3 million actually recovering from that. And what about the trust? In Asia Pacific, less than 50% of the customers trust online transactions. But when there's a lockdown, there's nothing else. Online is the only option, simply because people cannot get to the store or to the branch. In China, 69% of people worry that personal data can be stolen from mobile devices. And in Malaysia, 41% worry about their personal information. Not just in Malaysia, I do worry about my personal information every single time when I have to give my information somewhere. I always, and by the way, my suggestion would be, unless you really trust the counterparty, do not give them their date of birth, okay? A date of birth is one of the easiest ways to start building an identity and stealing your identity. So once they know your name and date of birth, things are very easy for criminals. So unless it's your bank or some sort of a government organization, be really careful with your date of birth. There is no need for some online retailer to be sending you birthday wishes. I'm getting enough of these anyway from my friends and my family. So there is no need for many people to know what my date of birth is. So we need to protect against that. And have a look. FICO says that 6 in 10 Asia Pacific banks say that use of fraudulent synthetic identities is on the rise. Now, Dr. Higuno was talking about identity crimes. Now, these are the people that exist actually. What about the ones that don't exist? A synthetic identity is a person who doesn't exist. Somebody takes my name and Vika's passport and says, here's Mario, this is the personal identification, the national identification number for Mario, mine and Vika's, and then they use Irma's address and apply. And this is a synthetic identity. That person doesn't exist. If that person goes into the bank and eventually gets some credit, what does the bank do when it discovers the fraud? Who do you go to? Do you come to me? Do you go to Vika? Do you go to Irma? The person doesn't exist. It's a false identity. And it's on the rise because it's actually much easier and much cheaper to create. And by the way, it can be automated as well. In Australia, you can go, they busted a gang on the Gold Coast who was selling. In Australia, we don't have passports unless you've traveled outside. If you've never left the country, you don't have to have a passport. Driver's license is the main identifier. A gang was selling driver's licenses on the Gold Coast. Real, because they have chips and some other security, real driver's license with the chip, with the security and everything. The only thing which is false is the identity. So I can go to them and say, here's my photo, these are the 10 names, please give me the licenses, and then I'll try and open bank accounts. So these are all the things that will be happening. And this is what the banks will be dealing with. Have a look. This is where it shows that the synthetic identity fraud is actually growing much, much faster than the other fraud. The blue line that you see here, this is from a company called ID Analytics. The blue line is the normal fraud, which is rising. However, the red line, which is the synthetic identity, is rising much faster because the criminals, you need to keep in mind that criminals are businesses. They are looking at the most effective and efficient way to generate revenue, like any other business. And if synthetic identity fraud is one of those, they will jump on it. So let's have a quick poll. I just want to get everybody's attention or opinion in the room. So identity fraud is becoming an increasingly big risk. What do you think? And the banks need to to fight it proactively. You should have the poll window popping up on your screens.
Okay, the participant can type the poll. Okay, poll 1, poll 2. Just click the button in your screen. Okay, participant will answer and strongly agree, disagree, or strongly disagree. For the polling 2, synthetic IDs are created by combining real and fake information and used for yeah.
Actually, I think that we'll just launch. Okay, just excuse me for a second. Okay, so here are the results of everybody strongly agrees. So let's continue. Also, I want to get your opinion. We have another poll, which is about synthetic identities. So you can answer it now. Do you think that synthetic identities are an issue that the banks will need to address?
Some participant can click the
Yeah.
vote, Mr. Mario.
And so do I, and neither do I.
Okay,
Yeah.
you didn't. Okay, oh, we seem to be having an issue.
Cannot
Okay,
click it.
we'll continue with the poll. We'll submit the polls during the Q&A. There seemed to be an issue with the polls. Okay, so talking about internal and external risks, just quickly. So external, we already have systems and processes that actually can help organizations. Improvements always welcome, because no system is perfect. If that was the case, then the system shouldn't exist, the fraud wouldn't exist. So we can always improve. How can we do that? Actually, artificial intelligence, this is what Dr. Higuno was talking about before, is one of the ways to do it. They were using, he was talking about one approach. I'll tell you about a couple of different angles where we can actually go and see how we can improve from synthetic identity fraud detection with social media analytics. First, and also with natural language processing. Second, which are both types of artificial intelligence which is applied to the problem. Now, social media analysis. When we talk about synthetic identity, as I said, it's easy to create because you just grab a few pieces of data from different places, put them together and apply. One of the things, however, which is extremely difficult or much more difficult to recreate is actually the footprint of that identity on social media. People use social media these days a lot. Creating an identity is one thing. Creating the posts or the activity for that identity going back 5 years is a totally different proposition. So if you have a look at Facebook, one of the most popular platform in the world, actually. This is a picture of my friends. This is how they grew over time. So in 2010, which is red, I had only 6 friends. In 2011, I had 12, and so on and so on. In 2020, I have 400 friends. This is a little bit below average. Obviously, I'm very antisocial, but never mind. What we can see here, creating the activity of somebody going back 5, 6, 10 years is much more difficult. So if we actually have a look at their social media footprint, we can see if that person potentially can be a synthetic identity or not. Same applies to Twitter. This is again a picture of my own Twitter followers. In 2007, when I first opened my account, I had only 3 people. That's why it's threat. And there is research, there are ways to determine what is the threshold where you say, okay, well, this is actually potential synthetic identity. And after that, as you can see, my followers started growing. So it's very unlikely that I'm a synthetic identity. But if you have a look at a graph like that, and most of the circles are not green but red, what does that mean? It's actually a higher risk of this specific credit application coming from synthetic identity. And if that's the case, it needs to be reviewed by human. Because one of the things banks want to do, and I've spoken to banks here in Australia, they want to be able to automate the credit application process as much as possible, including the approval. Because this way you can be actually giving credit to 24/7. There's no holidays for the systems. You just apply and you write credit. And this is a big revenue generator for the banks, which is natural. So in this case, what we can do, we can actually help reduce the synthetic identity by applying slightly different approach. Already the banks are doing a lot and they'll keep improving. This is just another way of where specifically artificial intelligence is applied. And same thing for natural language processing. With natural language processing, we are analyzing what people write. We don't analyze spelling, we don't analyze grammar, that's too easy. We analyze sentiment, we analyze feeling, emotions, and so on, so that we want to see if this application actually is real or not. And here's a question here. Question number 2 says, please describe how you're going to manage your repayments if you lose some of your income. So you're applying for credit. This is something that actually can be asked on the credit application form. And based on the answer, you may try to identify potential synthetic identities or fraudulent applications. Now, if somebody didn't answer anything, well, this is not right, okay? X or XXXXX doesn't cut the mustard. It needs to be actually reviewed by a human. It cannot be approved automatically. But here's another one. I don't think that this will happen. I'm confident I'll repay the loan in full. Well, they're confident that they are not going to repay the loan in full, simply because they never have the intention. This is a synthetic identity. They'll draw the loan and that's it. They'll disappear. So now, what happens here, we want to be able to automate that process. And artificial intelligence is one of the ways of doing that. Just another approach. We'll do the polls in a second. So just before I finish my session, some key takeaways based on what I wanted to share with you today. Digital banking risks are constantly increasing and then they will keep increasing. There is no going back. The digital channels will continue. I think personally that they will outgrow the other channels. Yes, there's a percentage of the population who want to go to a branch and speak to somebody. But think about in your own bank, how many branches have been closed in the last 5 years? I know that in Australia, there's a lot of them. Banks are just closing branches. Banks are actually starting to remove even the ATMs. Who cares about cash? Banks are now actually pushing the digital channels quite significantly. Artificial intelligence is a key mechanism to reduce the risk, simply because the criminals are becoming more and more sophisticated. We need to fight them with sophisticated mechanisms. What was working up until now will keep working, but we need to keep going further. It's not going to be sufficient. And simple measures like digital risk training, cyber, privacy, social media will have a big impact. When I think about digital risks, cyber is not the only digital risk. People sometimes equate cyber with digital risk. No, there is more to that. Privacy is a big issue. Social media can be a big risk for an organization, both externally and internally. But all of these measures can be mitigated. All of these risks, can be mitigated quite easily with some simple measures, training being one of them. Well, thank you very much. That was my presentation. Thanks a lot for having you here and listening to me. And now we're going to move to the Q&A session. Thank you.
Thank you, Mr. Mario, for your presentation, and the polling in your presentation is most so fun. Thank you to our three speakers for their presentation, and so participant. There's so many questions in the chat room, so we will next to the panel discussion from Mr. Barry Ariono, but before that, next we will move on to the panel discussion session, which will be moderated by Mr. Barry Ariono, Executive Chairman of Digital Banking Institute. And before we start the panel discussion, we will see the video teaser from New Risks of Banking in the Digital Age. Okay, Mr. Barry. Okay, we wait for Mr. Barry. So
Yeah,
I'm remaining
should
you.
be unmute, yeah.
Yeah, okay. Mr. Barry, you can unmute your audio.
All right.
Okay.
Thank you very much. Yes, terima kasih banyak Vika. Thank you very much to all of this great speaker today. In a new race of banking in the digital age, this morning until afternoons, hopefully all of you, all the participants enjoy this webinar. And thank you very much for Benjamin Giles from Trade and Investment Queensland. Yes, Pak Ben, terima kasih banyak. Dan saya akan campur-campur saja ya bahasa Indonesia dengan bahasa Inggris karena memang mostly participants from Indonesia pakai bahasa Indonesia. Jadi di sini ada dari Bank Spion, dari KIB Banks atau Line Banks, kemudian ada Visa, Mastercard, dan juga ada perbankan lain yang tidak bisa saya sebutkan satu persatu di sini ya hadir. Terima kasih banyak Bapak Ibu semuanya sudah hadir dan mengikuti sampai selesai. Nah, okay, then I would like to lead these discussion sessions with all the speaker. First from Pak Bambang Setiawan, he is a master of the risk management in Indonesia, also has a license of the risk management assessor. Thank you very much, Pak Bambang Setiawan, for your great presentations.
Thank you very much.
And yeah, we will discuss later on. And also Pak Adiguna Mahendra, Dr. Adiguna Mahendra. He is an expert of the artificial intelligence in Indonesia and has a very good startup for AI technology in Indonesia. And also Pak Mario Bojelov, my best partner from Australia, MBS Academy, Chief Executive Officers. And ladies and gentlemen, first of all, from Pak Bambang Setiawan already present to all of us, we can get some insight from him about the challenge, about the integrated risk management, and also the most important is on the digital risk management, right? And I would like to please to Pak Bambang to a bit conclude your presentations. I know you are running with the times. Yeah, don't have a chance to explain the key takeaways. So please, first, Pak Bambang Setiawan, to explain your key takeaways.
Thank you, Pak Bari. Yeah, I mean, this is the luck of first speaker. The time always limited because master of ceremony used to stop the first speaker very strictly, but the last speaker get more time on that. So this is the key takeaways for you. First, development of digital banks in Indonesia currently is, we can honestly speak, is still in early stage compared to fintech and digital banking services. Digital banks, I mean, that are ahead on presence. Fintech itu lebih dulu gitu. Fintech is in ahead of presence daripada digital banks. The challenges of developing digital banks can be seen from customer perspective, infrastructure, security, regulatory, culture, and digital talent and industry perspective, as I have explained to you. There is a perception gap. The perception gap between customer and banks on the customer experience and customer expectation. And from regulatory perspective implies that the authority encourages banking industry to accelerate digital transformation and enforce utilize the augmented technologies such as AI and cloud computing, which is the authority encourages the development of a pure new digital bank. However, this is the authority remain asking for the physical presence of the digital banks, which is the threats of digital banking. The current state of bank risk management no longer sufficient to mitigate cybersecurity risk, third-party risk, and all digital risks. I mean, we have to enhance the risk management that the practices that we have already practiced so far in Indonesia. Thank you, Pak Bari.
Yeah, you're welcome, Pak Bambang Setiawan. And thank you very much for your great explanation just now. And we are very interesting in the key takeaways number 5 here. All right, number 5. Can you please share again, Pak Bambang?
I'll share again. Okay.
Yes. Number 5, we should have a very good insight here in number 5. We can discuss later on with AI technology and from Mario perspective, from external perspective, external risk. Very interesting. That's number 5. We can see here in the presentation file in your screen. Given threat and digital risk on digital banking, digital banking is rising in Indonesia, and the biggest bank in Indonesia is still undergoing to be digital banks, BCA banks with the Blue platform, Bank Jago with the Jago platform, BRI with BRI Agro digital banks, and also KAB Hana Bank with Line Banks, and Bank Neo Commerce collaborate with Akulaku banks, and also C banks acquisition by BKA banks in Indonesia by Shopee, C bank groups, C groups, and the last we can see in the Alfamart convenience store there is Aladdin Bank Digitals Syariah, Syariah digital banks, Aladdin's, is newest digital bank in Indonesia. But we can see here the current state of bank risk management is no longer sufficient. This is very interesting, guys, ladies and gentlemen, to mitigate all the risks here from cyber security risk, the highest risk in the world, also in Indonesia, third-party risk, cloud computing risk, workforce and digital talent risk, data privacy risk, kebocoran data banyak banget itu terjadi di Indonesia, resilience, automation risk, and also digital compliance risk. But today, for the first discussions, I would like to arise one issue here, that's why workforce and digital talent risk is become the risk in the digital banking in Indonesia, especially, and in the world generally. What your opinion, Pak Bambang?
On what? Digital talent workforce risk?
Yes, why? Workforce and digital talent risk is become part of the digital risk on digital banking.
Yeah, because whatever technology we have, finally, ultimately, it's about human. It's about people who run the technology. So, yeah, so digital talent risk is the risk associated with the providing digital talent. But on the other, contrary to that, also risk arise by people we have not combating, but maybe like I saw in Mario presentations from the internal side. So we have to educate them. We have to know their capabilities and also their character. So KYE, know your employee. Now is very important as a mitigation to digital talent and workforce risk.
Yes, that's in line with what Pat Mario already mentioned in his presentation file. I can found here, and I can write down here that 70%, investments in cybersecurity is impacted by training program, right, Mario? And that's will give our return on investment 37-fold. That's amazing. That's a great impact on the digital bank in Indonesia, especially. And what your opinion for current state of the digital bank in Australia or in Indonesia? Does CEO or decision makers in a bank already concerns about your funding? Mario, please.
Yes, digital risk is getting higher visibility in a bank. So it is the CEO or the board of directors who are now concerned. This is the situation in Australia. It has been also forced to a big extent by the regulators, who also recognize that the digital risks is something that they need to deal with. And this is really important because, in my opinion, we need to be careful that digital risk is not something that the technology people need to deal with. Digital risk actually is something that senior business people in the bank need to be dealing with. Somebody higher up needs to be responsible. Somebody who directly reports to the CEO, not somebody who is 3 or 4 layers away from CEO. Somebody who directly reports, so pretty close to the top.
So how many chief of digital risk did you find in any bank in Australia or Indonesia? How many?
I cannot comment about Indonesia.
So because in Indonesia we don't have yet, right, Pak Bambang, Pak Adiguna, we don't have yet any position in any kind of bank chief of digital risk today. So it
so far not yet. I mean, but that risk management director there is a existing.
Yes, under
we have
director of risk management.
Yeah,
right?
yes. I was the one in the bank.
It also depends, I guess, on how the bank is structured internally. But as long as the risk position is linked to the chief risk officer position, that should be sufficient, as long as the digital risk doesn't sit in the technology function. Because I think that when the digital risk officer, chief officer position, or whatever the name is, maybe chief information security officer, but that's a little bit narrow. As long as they have the reporting link with the chief risk officer, this is where the biggest benefit will be. If it's treated like a technology risk, that will be very counterproductive, because it is a business risk. It's not just a technology risk. It is a business risk.
Yeah, so far we can see the gap in a internal bank today, a digital bank or digital banking structure organization today, that the most threat in the digital bank is cyber attack, right? But as Mario mentioned just now, under information technology or under chief of IT and operations, common sense in any kind of bank in Indonesia, they don't have the specific position for chief cyber attack or chief cyber security or chief of digital risk under IT and operations directors itself. So this is we can see the biggest gap, and I think through the technology, especially AI and intelligence, so we can fill this gap between a director of risk management and director of IT and operation. And Pak Adiguna, I would like you to give us some comment and your experience in financial technology, fintech so far. How fintech can run these gap and current situations in the financial industry.
Okay, so Pak Bari, actually there are several applications of AI in the financial industries right now. Actually, there are the most important things are related with the identification that I have just explained before. But there are also many other applications of AI. For example, for risk management, fraud detection, and also the risk analytics. Okay. From the point of view of optimization, we can also have several different application of AI. For example, for the portfolio optimization, especially for the treasury and for the investment. So this is maybe also related with the question from Pak Marsudi about the investment bank, right? So, but in Indonesia right now, I think we are still in a very beginning phase of implementation of AI for the fintech and banking industry. So we are still in a actually the main problem what we have with the application of AI is that we don't even have the fundamental things right here, which is the data infrastructure, right? And this is actually the prerequisite before you can apply any kinds of AI. So actually, what we need to do is we need to fulfill this step first. We need to make sure that our data infrastructure, our enterprise architecture related with the security and also the cloud and everything is in the right way. And then we can start to apply so many AI methods, like Pak Mari also mentioned about the NLP, and NLP has a very good applications in banking, like for example, document knowledge management and everything. But the problem is that how can we have that if we don't have the data right? We don't have aligned integrated data. So this is actually the thing. So to summarize, in Indonesia right now we are still in a very early stage. Yes. So like EQIC, credit scoring, we start to do that kind of things, but the rest, like the fraud management.
Yeah, a technology company like a fintech, yeah, Pak Diguna. But technology company like financial technology, and also we know Facebook, Amazon, Google, and Apple, they already enter in the banking industry, financial industry. See,
Yep.
and we can see their advantage on using AI technology in their banking services. So, we believe that they already implemented advanced technology for all the digital technology in the world, right? So, what do you suggest for the conventional bank or digital banks in Indonesia? How we can start it?
Okay, so actually everything started from the enterprise architecture. So actually, if we want to compete with that, tech companies, it is very difficult because their DNA is actually on technology, right? So they have already all the best engineers in the world. They also have the data and everything, and the service that they make is all microservices. So it's difficult to compete them on that technology part. But what the conventional bank has is actually two things. Actually, you have data, okay, related with your customers. You have the data related with the transactions and everything. And the second, there's another important thing, which is institutional knowledge. So this Google, Amazon, and everything, they have the technology, but they don't have the data and institutional knowledge.
Yeah.
So what the conventional bank needs to do is that they need to focus on the enterprise architecture and how to integrate the data and institutional knowledge using this enterprise architecture design. So to be more exact,
right,
a technology like middleware, SOA, microservices, needs to start to be adopted by the banks.
That's very interesting. Microservices architecture that in line with what Pak Bambang Setiawan just mentioned about the integrated risk management. All right, from technology perspective, microservices, then the bank itself must convert to integrated banker in Mandiri, in a regional bank in Yogyakarta. Do you optimistic that a bank is ready to facing the new digital risk in the digital age, Pak Bambang Setiawan?
I have to be optimist. I have to. I mean, honestly, no, we cannot be pessimistic on this. We have to be optimists because through the webinar like this, education, training, more banks will raise understanding on digital risk management, proper digital risk management. So they through learning process, they will raise the issue and they will adopt the effective integrated risk management, especially on mitigating the digital risk.
All right.
I am optimistic.
Thank you very much. Optimistic, and keep banking or conventional bank, digital bank aware about the integrated risk management and how to mitigate it, right? Okay.
Yeah.
1 minute left from my discussion sessions. Pak Mario, what do you suggest for your advice from your perspective about the external risks that banking ready to embrace the change?
Okay, so banks need to have a look at the new technologies, AI and big data, two of those. When you think about, because a lot of people wonder what is the relationship between big data and AI, just think about big data as the food for AI. So as Pakat Higono was saying, the more data, the better we need to get the data sorted, and the more data, the better the AI will become. So this is one of the things. Also, I'm just looking here in the chat box, and I'm looking at the comment from Joseph Chen that digital risk mitigation should not solely lie on risk management. I totally agree. So looking at the 3 lines of defense model, it needs to start with the first line of defense, which is the business. But in order to start with the business, so in order to start with the business needs to know what they need to do. So actually, we're going back in circles, but we're ending back with training. We need to just train the employees so that they understand what can be done, and that applies both to external and internal risks.
May I comment on the Joseph?
Thank you very much.
Yeah, but Joseph mentioned that even though we have good, excellent stress mitigations, if we are not doing digital transformation well, then will be is it that wait a second. I found something here somewhere here. Yeah, going forward, mitigating digital risk is a given, but not adopting digital transformation is the bigger risk in banking. Yeah, I'm totally agree. So start with the digital transformation first. On that process, we should shift the make a cultural shift, develop and build the digital culture, not only to the employees, but the board of directors, the board of commissioners. They should understand digital business and its risks, not just the employee. So I'm totally agree that digital transformation, correct digital transformation is the first step to build a digital banks business, which is safe enough for our customers. Thank you, Pak.
All right, Pak Bambang. I think our time to discuss is over.
Pak Bari, may I? There is one question from Pak Marsudi. Pak Marsudi is Australian alumni who now is the commissioner of Telkom.
Yeah,
thank you, Pak Marsudi, for joining us. His question is about digital banking is not developed in the segment of corporate banking. I think I have mentioned it in my presentation, especially on customer perspective, which is customer from the corporate banking segments still not so trust to the digital banking because it's about the big money. I don't know in the future, but currently in the current state, it is impossible to do billions of rupiah or trillions of rupiah through digital banking. So we still, like I said, that our customers have been going through the digital, have been going through banking evolution from 1.0 to 0.0, and they have already familiar with people, with physical appearance, and also they still need human touch because the amount is so big. So yes, I agree that customer corporate banking segments at this time cannot going through digital banking, but for communication, for process maybe yes, but for approval, for analytics, we have to go beyond digital banking.
Yeah, we are still.
Can I add something here, Pak Bari, to what Pak Bambang was saying?
We can stop first the discussion part, the panel discussions. Then we can moving forward to Q&A, Pak Mario.
Okay, well,
that's already
Yeah.
Yes.
Yeah, Vika.
Sudah dijawab beberapa.
Okay, thank you, Mr. Bari.
Anyway.
Yes, next we will read question from the participants. So many questions and participants in here. Question first from Didi from Hana Bank. This is question for Mr. Adi. How to deal with unsynchronized data spoken with the bank system, which often happens in opening an account at bank. What is the easier solution for customer? Okay, there's a screen from Didi.
Yeah.
Hana Bank.
So maybe I will directly.
Yeah, Pak Adiguna will answer this question.
Yeah.
Please, Pak Adiguna.
Okay. Yeah, so actually, there is a concept called the data virtualization for the data integration solution. So actually, when we have a lot of data and we want to integrate it in a way, there are two ways. What you can do is you can make a very, very complex kind of big data or data warehouse initiative. And this is usually takes time, takes a lot of cost and everything. And there are easier way. Okay, one of it is data virtualization. So this is actually a methods of data integration which sits on multiple data source. So you can have a multiple data source. You treat it as a single source, single logical source, and after that you can align and integrating the data as if it is in one data warehouse, right? And there are a lot of solutions out there for this data virtualization. There's a GBoss from Red Hat, there's a TIBCO, and also there's a Informatica. So I have implemented one of these systems for one of the BUMN, and you can easily merge and integrate data with these methods. I think I hope that answered the question.
Okay, thank you, Mr. Adiguna. And next question from Irmansyah from OJK to Pak Bambang. From your presentation, do you view where the cyber risks put under the integrated risk management and the capital framework? Terima kasih, Pak Bambang.
Yeah, thank you, Pak Irmansyah from FSA. My warm regards to Pak Wimbo and Pak Heru Kristiana. My opinion is cyber risk should be put under operational risk or even strategic risk, because the impact is so big. The failure to prevent the security cyber attacks may impact the bank as a whole. So I would put it in under strategic risk, and it should be a digital risk officer at least, yeah, to maintain, to monitor. And as I propose or I suggest on using the cyber threat intelligence as the solution to detect, to identify, to detect, and to prevent any cyber attacks. And the capital framework, of course, we have to start calculate what is the impact of cyber attacks failure to our capital. So yeah, banks should provide more capitals to cover this kind of risk. But actually, digital banks, I don't know, Pak Irmansyah, maybe your information, OJK is not issue the regulation that digital banks at least must have 10 trillion rupiah on the minimum capital requirement. The pure digital banks. Okay, that's my answer, Pari.
Okay, thank you, Mr. Bambang. There's question too from Joseph Chan, but I will read from Marsudi Wahyu Kisworo to Mr. Mario. Mr. Mario, in Indonesia, there is in slide 2. Okay, Mario, in Indonesia, DOB is used as national identity number, which is as public as NAN. Many public services and financial services use this national ID number as one of their mandatory data. What do you think, Mr. Mario?
This is a really interesting question because Indonesia is not the only country like that. Originally, I'm from Bulgaria, and there is a national ID number in Bulgaria as well. Now, what is interesting that regardless of the fact that the national ID number exists, the fraud still exists as well. So it seems to me that just relying on the national ID number is not sufficient, because as I said, you can. In Australia, you can buy a driver's license, which is a form of identification. If I go to Bulgaria, I certainly am pretty sure that I can buy a Bulgarian passport with one of these numbers. The number is a fake. It doesn't exist. It just follows all of the rules which have been apply to it. Like, okay, when you look at the credit card number, it's very easy to identify that the credit card number is false simply because it doesn't follow all of the rules. However, there's still enough fake credit card numbers out there which follow all of the mathematical rules built into them. It is the same with the national ID number. I don't think that it's possible that it is the panacea. Otherwise, the national ID number would mean that fraud will disappear tomorrow, which would be good, but probably we're not there yet.
Okay, thank you, Mr. Mario, for your answer. And the question from Sarah for CIMB Bank. I think this question for Mr. Adi. Currently, is there any bank, either domestic or overseas, that already use face recognition for ATM transaction, Mr. Adi?
Yeah, I think abroad there are some use case for this, but in Indonesia it's still on proof of concept. So I have not seen.
I think China yes.
In China,
some
yes,
China banks use that.
Yes, already used that China.
When I was in China before pandemic anyway, they use biometric from the eyesight.
Yeah, correct.
This face recognition.
Yeah.
On ATM, but now ATM is less usage, right?
Yeah.
More people use mobile banking instead of
mobile
ATM.
banking.
Yeah. In China, all the even for the payment and everything, they are using face
recognition.
Yeah, face recognition.
Biometric. Yeah.
Oh, in China,
biometric, right?
Yeah, face biometrics.
Yeah.
Face biometric. Okay, thank you, Mr. Adiguna and Mr. Bambang. His question from Joseph Chan, OCBC NSP, to Pak Bambang. In a recent cybercrime survey, it was reported that 97% of hacking crimes have been done via social engineering. Would you be able to share with us how much have been done by the banking industry to educate customer and train staff to mitigate this risk, Mr. Bambang? Terima kasih.
Thank you, Pak Joseph Chan, for your question. Actually, I don't to answer this because there so far I haven't got the data. But what I got from IBM X-Force, 17 to 19% cyber attacks is to bank. But your question is how much is from the bank? Yes, it's correct. Correctly, am I wrong? How much have been done by the bank industry? Yes. So what I have the data is from IBM X-Force on 2019 before pandemic. 70 to 90% cyber attacks is to bank. Even now it's getting bigger since pandemic. According to BSSN, Badan Cyber dan Sandi Negara, the National Agency for Cyber Security, there are 495 million cyber attacks in 2020, which is 5 times increasing 5 times before 2019, and 74% of banks and insurance experience rise in cyber crime. That's I hope you can I can answer your question.
Okay. Thank you, Mr. Bambang. I hope answered it from Joseph Chan from CBC and ISP. And their question for, I think this is for Mr. Mario from Bang Mas Pion. Following the global trend that we must go with this, it will need so much effort we must do to keep up with the current business atmosphere. What is the right method to upgrade so that all customers can keep up with the speed of technology development and risk management?
Okay, so the customers are already keeping up, relatively speaking, with the speed of technology. When you think about it, the customers already use Facebook, Instagram, and a number of other platforms on a daily basis. So the only thing that we need to do is actually to protect the customer at the back end. There is a number of ways of doing that. Like, okay, when you go and do your mobile banking at the moment, you are required to enter password. It can be the Face ID, it can be fingerprints or whatever. The other thing, again, goes back to education, because I know that, for example, in Australia, my bank sends me every now and then a very short email written in a very simple language, which doesn't require any technical expertise, just to tell me, okay, we are never going to ring you asking for personal details. We are never going to ask you for personal details over email. These are some very simple measures that a bank can schedule to be happening on a quarterly basis, for example, and it doesn't cost anything. Just one more email from the bank saying, if somebody tells you that it's coming from us, it's not. We don't ask for that type of email or over phone. So these are some of the things that the banks can do. Again, they're very simple. It can be a very simple process that needs to be approved and implemented, and then it will just go on autopilot, essentially. So there is hardly any cost associated with it.
Okay, thank you, Mr. Mario. And there is one question from Bang Mas Pion too, but this is from Robert to Mr. Mario. Currently, the majority of digital banking activities are carried out to increase funding transaction. How to develop digital banking even more, thus balancing it with lending transaction? Please share to us. Thank you. From Robert.
This is difficult for me to say, but I think that digital banking will develop on its own. Depending on the business imperatives and depending on what the customers of the bank want, it will be a different mix of funding versus lending transactions. And at the end of the day, I don't think that any organization needs to force a specific type of activity. It just needs to listen to the market. And then it will just follow on its own. Well, in any case, we have been forced by the pandemic to start increasing digital banking. Organizations have been forced, customers have been forced. I think that there are some processes which would naturally occur, and we'll see whether the funding versus lending transactions mix will change. When one will increase, the other one decrease. It depends on the situation.
Okay, Mr. Mario, thank you for your answer. And there's a question from Arif Kusuma from Mastercard. This is a question for Mr. Bambang and Mr. Adiguna. There are two questions from Mr. Arif. How the banks anticipate and mitigate this risk? From my view, Indonesia banks are more reactive rather than proactive in combating this cyber attack and data breach. The question two, what is the lesson learned from the cyber attack and data breach from the perspective of reputational risks? What are the roles of regulatory such BI, OJK, and associations such as ASPI and AKKI in mitigating this cyber attack and data breach? Any talk on data protection policy in Indonesia? Please, maybe Mr. Bambang first, and then Mr. Adiguna.
Yes, thank you, Pak Arif. He is a president of Mastercard, if I'm not mistaken. Pak Arif Kusuma, ya. How the banks anticipate and mitigate this risk? Yeah, I'm agree that so far Indonesian banks are more reactive rather than proactive in combating cyber attacks. And the question is, so what should they do in the future? They should adopt the integrated risk management, on which they put digital risk management on a priority. Of course, the conventional risk management or enterprise risk management must be ongoing, but the digital risk management must be put in priority, and also have the experts, digital experts, to monitor, to identify, to prevent any cyber risk. Like what I've said in my presentations, one of the effort, you can use solutions provided on a security program like CTI, CTI Cyber Threat Intelligence. So we should not just use cyber threat information, because cyber threat information, just the information, just the data, but cyber threat intelligence, we can get a solution, we can get analysis, and we can prevent even before the attacks are coming, we can prevent it. So, and then the second one, how is the roles of regulators such BI, OJK? So far, I've seen that they provide like education and socialization to banks on preventing cyber attacks. But I think it should be more regular and more socialization, more education on this provided by our regulators. And any thoughts on data protection? Yeah, data protections, I think is on the way to be a law in Indonesia, undang-undang perlindungan data, ya. Data protection law. I think if our legislative finaling this law, that's a great achievement in Indonesia on protecting data and giving data privacy in the priority. Okay, that's so by through this webinar like this and other social and education trainings on preventing the cyber attacks or digital risk, it will raise more awareness to the banks and the people how to prevent and safeguards the banks from any cyber attacks. And also another importance is educate our customers, because they must protect their own asset first by following the rules on security, not to share the password, not to share the OTP, even never lost the cellular phone, never put the password on the cellular phone like that. So educating people, educating customers is really important as well. Thank you.
I would like to say something, if I may, on the privacy, data protection policy and the privacy. I'm not familiar with the Indonesian legislation, but there is a piece of legislation coming from Europe which basically applies across the world called GDPR, General Data Protection Regulation.
GDPR, yeah.
And people think that because it's coming from Europe, it doesn't apply. It does in a sense. If you have customers who are European citizens, it does apply to any organization. I just want to share a personal story that happened to me before COVID, because I was still traveling, not stuck in Australia for the last 18 months. So it happened in a bank in Southeast Asia. I cannot tell you which bank, but I was running some internal training, and we were talking about digital risk specifically. So that was a digital risk course. And we were talking about privacy, and I mentioned, okay, so what about GDPR? What is the situation here? Mind you, these were like all of the internal auditors there, 30-something people. And they said, listen, no, Mario, we are complying. We've done all of the work. I'm thinking, okay, cool. I really cannot say anything. So as the course finished, at the beginning, they had to actually take my driver's license, take a photo, just so that they would give me a security pass so that I can go into the bank. So at the course, I said, I just thought, I was guessing what the answer is, but I just thought I'll play a little game here just for fun. I said to one of the senior managers there, I said, listen, can you tell me what is the email address where I can send the request for my personal data to be destroyed? And he just looked at me blankly. He said, what are you talking about? Well, GDPR, that's part of GDPR. People have to be able to request their personal information to be destroyed. My point is that people may think that they've ticked a few boxes and they're compliant. Actually, probably no. So it is good to dig deeper and have a look at those privacy regulations, because even if there is no Indonesian law, there is other legislation around the world which actually will serve a similar purpose. This was from me. Thanks.
Thank you, Mr. Bambang and Mr. Mario. So maybe Mr. Adiguna can answer from Arif Kusuma. Their question from Arif Kusuma from MasterCard.
I think I'm going just to add something, because Pak Bambang and Pak Mario has already explained it very well. So about the questions, whether the banks in Indonesia are they really anticipate and mitigate the risk or not? I would say, well, I'm not from bank myself, but I work with some banks as an enterprise architects and also consultant. I think, in my opinion, yes, they are anticipate and mitigate the risk. Unfortunately, this is not just, it's not an initiative that we can just do once and we expect that the security will be much stronger. This is going to be a systemic. So and Mario was correct. It's not only ticking a box, so you can adhere to some standards or ISO and everything, but this is also the things, the culture and also the architecture that we need to really enforce to the bank professionals. And unfortunately, my answer for this is yes. A lot of banks in Indonesia, they still need to improve their systemic architecture, as well as the culture of data protection and data security, because this is also come from the individuals. Most of the data breach is also, I think, involving insider in the banks itself. So it's not only a matter of technology and everything, it's also the mentality and the culture. So, and there are a lot of needs to be improved for that. And another thing, which is I'm also thinking that this is a problem. To be honest, I see that data privacy is not seriously handled by the government, to be honest. Like, for example, the Perlindungan Data Pribadi or PDP. It has been there in the Peraturan Menteri since 2016, but up until now it is not approved yet. I don't know what's happened, and my team was involved in the formulation of PDP actually, and there is no follow up until now, until what we have happens with the BPJS, which is a data breach involving millions of Indonesian. So I think also I'm not speaking for the government, but I think this is a expectation also from me for the government to be more serious about the privacy of their citizen. I think that's all, Bu Fika. Thank you.
Thank you, Mr. Adi. Okay, so for the last question from Ade Budianto, I think this Mr. Bambang can answer it. Why some digital bank clean up their saving and credit isn't allowed? So they have to start all digital after got the permit from OJK? From Ade Budianto, Mr. Bambang.
Why some digital banks? So they have to start. I'm sorry. The question. Why some digital bank clean up their savings and credit? It is not allowed. I don't think that digital bank in this context is we just have just a new digital bank like Bank Jago, PCA Digital, Blue, and what else? Neo, or not yet operated. So I don't think they clean up the saving and credit because it is not allowed. So they have to start all digital after got the permission. Yeah. Digital banking services must be approved by OJK, and digital bank, I mean pure digital bank, yeah, of course, must be licensed from OJK. Okay, that's my answer.
Yeah. Okay. Okay, thank you, Mr. Bambang. From the last question from Mr. Ade, there is a comment too in the chat section from Ethan Ratu. Pak Bambang melihat adopsi digital banking as binary. Yes, there are some big transactions. There are much more retail users that needs easy access to bank service. So this situation shouldn't hold the banking industry on adopting digital banking more aggressive. Thank you for your comment, Mr. Ethan Ratu. Thank you to our speakers and Mr. Bari for guiding the panel discussion. It's time for us to announce the lucky participant who will receive the special prize. Okay, who will get the special prize? There will be 10 names. Okay, please listen carefully for participant. There is Irman Shah from OJK. Congratulations to Irman Shah. Joseph Chan from OCBC NISP. Congratulations to Didi from Hana Bank, Sarah from CIMB, Joseph, okay, then Marsudi Wahyu Kisworo, Arif Kusuma from Mastercard, Adek Budianto, Tri from Bank Maspion, and Robert from Bank Maspion. Thank you. Congratulations for the lucky winner. Please contact to the committee for prize collection, and there will be interesting gift from Trade Investment Queensland. Okay, ladies and gentlemen, we have come to the end of the webinar. Thank you to our speaker and moderator today, Mr. Ben Giles, Queensland Trade and Investment Commissioner, Indonesia Trade and Investment Queensland, Mr. Bambang Setiawan, Chief Digital Banking Digital Enterprise Indonesia, Mr. Adi Guna Mahendra, Lecturer at Central Queensland University Indonesia, Mr. Mario Berjulov, Chief Executive Officer MBS Group Australia, also the moderator, Mr. Bari Aryono, Executive Chairman Digital Banking Institute. Okay, so maybe please allow me to highlight the following conclusion. The main challenges for the banking industry are the potential for increased risk of cyber attacks, investment needs, availability of digital talent, both in adequate quality and quantity, need for equitable communication network infrastructure, and regulatory framework that support the development of banking digitalization in the future, as well as change in the general public characteristic, along with the increasing number of development of the financial sector ecosystem. Okay, before we close the webinar, there will be Mr. Marsudi to talk, to unmute the audio.
Pak Marsudi, selamat pagi Pak Marsudi.
Maybe Mr. Marsudi can unmute the video.
You can unmute yours. Okay.
Oh, okay.
Yeah.
Thank you. Yes, I think this is very good seminar. Thank you very much for all amazing speakers.
Thank you.
I get a lot of knowledge and understanding on, especially on digital banking. Thank you very much.
Hopefully, Telkom has already adopted the integrated risk management and digital risk management, Pak Marsudi.
Yes, we did digital transformation since 2019. I was there, and digital telco. So it's yeah, quite similar to bank who is also moving.
Right. According to BSSN, 495 millions of cyber attacks in 2020.
Yeah.
So I mean, we have to be more curious and be careful on that attacks, or those attacks.
Yeah, it's statistically in Indonesia, within 5 seconds you are online, then there is already an attack.
Yeah.
So I have also several big state-owned companies who have been experiencing attacks in previous month, and it's true that most attack actually come from using social engineering and come from inside. So
all right.
Happened with 2 big state-owned companies in Indonesia. I think you read the newspaper.
And 20% of those attacks, their destination is banking and financial sectors.
The biggest, yes, the attack, yes, but the biggest crime was with the BPJS Kesehatan and Pertamina last month.
Okay, all right.
Pertamina lost
The crime, Pak.
for that.
Oh, what's
Pertamina.
Yeah. How much the loss?
I think million US dollars, something like that. Because it's ransomware. The data was kept attacked by.
Yeah,
But
because
Okay.
as the increasing number of connected devices to our system, that the rest is increased. Oh, that's good picture.
Wow.
But Mario,
This
you
new from
look
Zoom,
so small.
immersive view from Zoom. This is new.
It is called
Thank you very much, Pak Mario. Yeah, we can continue to answer the question.
Wait, I'll take a picture
Vika?
first.
Okay,
Yeah.
there's a time, so we will do a question from, I think Didi can
Pak
unmute
Didi, ya?
your
Oh
audio.
yeah, Pak Didi.
You can start your video and share your question.
Oh, Didi.
Pak Didi from KAB
Oh, Didi
Hana
from
Bank, right?
Hana Bank.
Hana Bank. Line Bank now.
No, still Hana Bank.
Still Hana Bank. Okay.
Yeah, they have a digital, but like Blue, it's just few customers.
Yes. How, Mr. Didi?
Mrs.
Okay.
Mrs. Didi.
Oh, Mrs. Didi. Oh, sorry.
It's okay.
Her name is
Thank you,
Dian.
ma'am. Yes,
Okay.
my name is Diane. Yes,
Okay.
I very appreciate the conference. Is good. It's good to inspiring, and my bank is the growth to the on year bertahun-tahun ya, Mister.
That's why I trust KAB Hana Bank.
Hello. Putus-putus, Mister. Sorry. Halo.
Yeah.
Putus-putus, ma'am.
Okay,
Kita dengar jelas tuh.
Yeah.
Your voice is clear.
Didi tidak mendengar putus-putus.
So I think there's
Maybe my
connection.
signal. Yes, my signal, my connection.
Yes.
Yeah, we can continue to
We
answer
can
the question.
continue to the there is a time, so can admin or Bu Irma or Bu Resti can share the screen from the last slide. There's a question from Mr. Marsudi, I think.
Yep. Hold on, just give me a minute. I'll share my screen. Hold on.
Okay, there's a question from Mr. Marsudi.
But I have already answered Pak Marsudi's question on corporate banking segment.
Yeah, actually, I put just a comment on the last one that for AI is implemented in the enterprise in 2 parts. One is analytic part that has been discussed in this seminar. And the second is in process part, process automation. And the risk is much higher in process automation. That's actually my comment. So for face recognition and things like that, yes, there is risk. But now also AI comes into process automation part, which is which exposed to a much higher risk than in analytic part. That's my comment actually. It's not question.
Okay. So
Comment to Pak Adiguna actually.
So okay, to Mr. Adiguna, yeah, there is a last slide and last question for Mr. Marsudi Wahyu. Pak Adiguna, there are actually two paths in applying in digital enterprise. One is analytic path, like what have been discussed, but there is also a process path. Oh, okay. I think there is an opinion from Mr. Marsudi.
I agree, Pak Marsudi. RPA itself is it has a high risk because so many people also use RPA without having a robust kinds of enterprise architecture and installed before. So people treat like, okay, we can solve this problem with RPA, we can solve that problem like with RPA, but actually between one system and another system, there's an interconnection, there is a kinds of interaction. So when you are applying the RPA without fundamentally understand on the whole, be an error which is caused by your robot or your or bots or whatever, and you don't know why, you don't know how it happens. So it happens a lot. So I think that's a huge risk. I completely agree with you. So we need to, going back to the fundamentals, we need to take a look into the enterprise architecture as well as the data infrastructure to see the interaction between the systems.
Okay. Thank you, Mr. Adiguna, for your answer. There's a time maybe participant can ask the question for speakers if there are no.
Vika, sorry to interrupt.
Yeah.
I failed to share my screen just now. I'll try to share again, because there's another slide left with questions. So I'll try to share. I hope it'll work this time.
That we have to educate people how to use WhatsApp to make it privileged and confidential.
Hold on. Is it working now?
Yes, is it working now?
Okay, thank you. Sorry for that, sorry.
Okay, so the question from Mr. Marsudi has already answered. Three already answered. Marsudi to Mr. Adiguna already answered. I think all the questions are already answered.
Pak Etan, Pak Etan Ratu, Pak or Ibu ya, Etan Ratu. You said that there are some big transactions. There are much more retail on the chat, on the retail users that needs easy access. So this situation should not hold the banking industry on adopting digital banking more aggressive. This is the opinion of Pak Etan Ratu. So I agree that we should giving access to more customers, not just consumers and micro customers. But as we give more access, we should provide more prevention action, provide more solution to prevent our customers. I agree to give to retail customers to get easy access to digital banking, but digital banking, digital risk management must be top priority in the bank, so we can prevent our customers from any fraudulent or any attacks that resulting in the loss both to customers and both to bank as well. Thank you.
I would like to say something here in relation to that. I think that banks will be forced to adopt digital banking in relation to corporate transactions, not just retail, because there are a number of smaller corporates who will embrace digital banking, and they will be looking for frictionless way to perform transactions, and banks will just lose business as a result of that. They're either going to adopt digital banking and give those customers, not the retail customers, these are corporate customers, these are companies with 10, 20, 50, 100 people. They will actually look how to do banking in some sort of a digital way, especially today when the world is global. And I'm just trying to look it up now. I was forced because our company, we have customers around the world. We also have people who are working in Malaysia, in Dubai, and so on. So after checking out the traditional banks, eventually we settled on Wise, because this is the easiest way to transact and transfer money to people around the globe. And if my bank gave me that, I would have stayed with them, but they didn't. So actually I went to a third-party provider. And this is the risk that the banks are facing. Either give the customers what they want, or they'll go wherever they can find it. And digital banking is one of the big trends now. Another example, last week, we actually finalized the registration of MBS Academy Malaysia. And that was done fully online, and it took 2 or 3 weeks to register a corporate entity in another country. There's a provider who just does it online. Do we need to go through the traditional providers? Well, not really. We did it like that. So this is the power and the risk for digital services, not just banking, but any government services, but we're talking here about banking. So either the banks will give the customers what they want, or the customers will just run away.
Okay, thank you, Mr. Mario and Mr. Bambang. Maybe this is for last session from this webinar. Maybe Mr. Benjas can share the closing statement or closing speech.
Thank you, Vika. Look, I would just like to thank all the speakers for today. I admit I'm a user and I have learned a lot today. I really have. And I really look forward to the further discussion. We are here to help. And of course, our friends at MBS, Mario and Adiguna at CQ are here on hand as well. So we look forward to meeting again soon and continuing this discussion more and offline. Thank you. Makasih ya.
Okay, thank you. Thank you, Mr. Ben. Thank you for all the speakers and moderator today, and all the participants will get the special prize from Trade Investment Queensland and Digital Enterprise Indonesia. Congratulations once again. I'm reminding you to Bapak Irmansyah, Joseph Chan, Didi, Sarah, Marsudi, Arif Kusuma, Ade Budianto, Tri, and Robert. Thank you and congratulations. And thank you to our speakers, Mr. Benjas, Mr. Bambang Setiawa, Mr. Adiguna, Mr. Mario, also the moderator, Mr. Barry Aryono. I'm Vika Quens. Thank you. Good afternoon and goodbye all.
Goodbye. Bye-bye. Thank you.
Pak Ben, terima kasih banyak Pak Ben.
Thank you, everyone.
Thank you, Bu Irma. Pak
Thank
Mario,
you, Bu Irma.
Thank you, everyone.
Mario.
Pak Ben.
Yeah, see you on the top. Yeah.
Sampai ketemu.
Pak Adi.
Thank you, Bu.
See you.
A very good webinar ya.
Ya,
Lancar tanpa
Bu Resti.
halangan.
Terima kasih Bu Resti bantuannya.
Terima kasih
Bu Resti, Bu Irma.
Bu Vika, thank you Vika.
Sama Pak Bambang.
Thank you. ada yang lupa nggak ditayangkan tadi ya?
Pak Dodi dan Mawan, dari mana Pak Dodi ya?
Ya, terima kasih.
Pak Dodi, terima
Iya, Pak
kasih
Dodi.
kehadirannya.
Ya, terima kasih semuanya.
Thank you, Pak.
Ya, makasih Pak.
Terima kasih Pak Masudi.
Oke.
Presentasinya
Thank
nanti
you, Mario.
dikirim ya.
Thank you much, Bu Irma, Pak Bambang Setiawan.
Mari, terima kasih.
Yeah, and don't forget to send the merchandise souvenirs to participants. Managing by Bu Resti, Bu Irma, and Vika Kun.
Great session, Pak Bari. Great discussion. Good.
Yap, oke Bu Irma, thank you. Saya izin live dulu ya, Bu Irma.
Oh iya, mau.
Mario.
Izin live.
Saya live dulu ya.